The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, once again, looking at Friday's trade action, pretty tough day to end the week with heavy pressure in grains and oilseeds, soybeans, meal, wheat. The downside leaders, corn, getting in on the action as well. And it turned out to be a pretty tough day in the livestock arena. We gave away a lot of our strength in cattle by the end of the session. Mixed bag of outside markets, a high U.S. dollar still. And looking ahead, we got a key USDA report coming up on Friday the 10th. A lot of things to discuss here as we get to the end of our holiday trading period. Joining us for a conversation, Craig Turner with StoneX. Craig, Happy New Year to you and yours. Thanks for being with us today.
Yeah, Happy New Year. Thanks for having me.
You made this comment to me before we started, and I think it's important to note that really the way this week has been, we're kind of like at the tail end of our holiday trading period. Like Friday's action, tough day, really tough day in the grains and oilseeds, but maybe amplified a little bit by just the holiday mode kind of finishing out because, there's a lot of folks that still aren't back to trading desks per se until Monday, right?
Yeah, that is true. Usually, this whole week of New Year's and also that whole week of Christmas, there's a lot of people out, the banks, the funds, investment, asset management. So no one, they always say that, you don't see, the full volume coming back into the markets usually until, that first business day after the New Year week. So that'll be Monday. But listen, next week we're gonna really hit the ground running here, right? With a full trading week after the holidays and also that WASDE report. So you do tend to get low volume moves during the holiday period. You can make the case maybe the market ran up a little bit too much, right? During the holiday period, you can make the case that we may have come down a little bit too much today. It seemed like they were all sellers and there just weren't a whole lot of buyers out there to stop the bleeding.
No, there was not. I wonder, farmers selling. I started to notice basis widening out a little bit here through the holidays. Was farmers selling? Do you think maybe the main driver of some of the downturn on Friday in the grains and oilseeds, Craig?
That definitely was part of it, right? Because there's been a lot of farmers out there that have been waiting for the new tax year to make sales, and we had this nice rally. Corn's been up 50 cents since October. Soybeans made what, a 60, 70-cent rally. So, guys who've been waiting need some cash flow, see good prices here. And I don't blame them on the soybean side. There's still a monster crop coming out of South America, most likely. Demand's just been okay. You can make the argument that they are dry in Argentina, but that's more of a corn story probably than a soybean story at the moment. So I can see it. I will say I was probably the most, surprised or concerned about today was seeing wheat down 3%. Chicago wheat was down 16 cents plus to about 5.29, and I didn't like seeing that. I was actually kind of surprised we got that far down today.
Is that a case of just the super high dollar, that 109 level, like 25-month highs? Is that the main reason why wheat's taking it on the chin here this week?
Yeah, so what we got to remember here is like the reason to be bullish wheat was going to be an export demand story in the second half of the marketing year as the rest of the world gets tight. And the stronger the dollar gets, the harder the harder it is for the wheat market to garner those exports. If you think about it, if there's any market in the grain and oil seeds that's sensitive to the currency, rates around the world, it's definitely the wheat. And the United States is the highest priced wheat right now. So it does not help. And, you get a day where everyone's selling. I think wheat was down 3%. You got soybeans down over 20 cents. You had corn down 8 to 9 cents. And you get wheat as the leader there.
Well, I wonder about this. Looking ahead to that key WASDE report on the 10th, and a full week of trade, with the exception we'll close a little early on Thursday the 9th with the day of mourning for former President Jimmy Carter. But you look at some of these price levels here. Let's talk managing risk in the grains ahead of that key report, which, Craig, we know January report so volatile. A lot of the talk about acreage numbers will get more, and it's one has to wonder, especially with corn, 450 corn, 460 corn. I mean, do we start locking in some floors there ahead of that report, things of that nature? I mean, talk to me about risk management.
Yeah, I think you do. If out of the three commodities, corn has the best bullish potential, right? But that also means if you get a miss on the report, it can go down the fastest too, or get a or percentage wise can get hurt, especially if they're adding back uh, supply into those balance sheets. So personally, I think we come down a little bit on the production and they inch up the demand a little bit, and maybe we can get a little bit of a rally post WASD. The problem is stranger things have happened, right? We've all seen the curveballs come out from the USDA, and put protection right now isn't so bad. I mean, the market hasn't been that volatile. I mean, you could get if you have to protect old crop, you could be 10 cents away from the money for an option that costs a put side 5 or 6 cents. We were just doing that this morning. I think what's interesting here on the new crop is if well, one thing that's been disappointing is just the inverse that corn's been in. I mean, it would have been nice to see December corn get up to 450, 460, 470 this time of year, and we just haven't. And I think the big question is like, do you start protecting corn at 440, right, for a new crop, or do we let things run? I think for the old crop, yeah, you got to make some sales here, or you got to get some protection if you're still holding a lot in the bin. And the price levels are good, and you can get a pretty good put on that. But for the new crop, you kind of got to be a little creative because like a 440 put, I want to say was 20 or 30 cents like the last time I looked, and that's really not doing anyone a whole lot of favors there, right? So are you buying put spreads? Are you selling call spreads to help finance it? Do you go to the elevator and do like an accumulator? Or you just do an HTA? There's a lot of different ways. I think it'd be really nice to get a little bit more of a rally in corn, but I think for the new crop, but for the old crop, I think you got to take advantage of some of these prices, or just look at those puts. I mean, they aren't that expensive, in terms of where they've been in the past.
I wonder broadly too, and I could kind of rope in the livestock trade here just to kind of tie with the grains a little bit. I know Friday's action was a bit lower across cattle and hogs, but you look at feed margins with a pullback like we saw Friday, and just the overall talk of interest rates at a high dollar and export sales across the board were pretty lousy out Friday morning. So, I mean, the whole dollar interest rate inflation play across the ags, I think that's another area of concern here early in the new year, right, Craig?
Yeah, so here's the thing, like that's definitely puts pressure on the grain markets. We saw the livestock market, especially cattle, kind of weaken a little bit. What's interesting on livestock is, when you talk to some of the people we know down in Brazil. Like it seems like China all of a sudden wants to Brazil do less cattle and more grains, right? You talk to some people here in the United States and in Canada, and there isn't this big push to increase herd, especially on the cattle side. So I don't know. I mean, I can see the cattle prices staying high relatively until something happens. Like there has to be some incentive to get those cattle numbers higher. On the grain markets, I agree with you. Like I'll tell you, meal I'm concerned about. We're going to be crushing for oil, and the meal and the feed demand just isn't there, right? And then we're gonna, and we also have that downward pressure from soybeans. From the wheat side and the corn side, I do think we could get. I mean, I would think five. I mean, we're getting to a point here where wheat is at a pretty good value. Um, but yeah, if you don't have that inflation trade, going into the market, that takes away some of the fun money.
Very true. You mentioned South America, weather conditions. Still watching Argentina for dryness and maybe some of that creeping into southern Brazil, but a lot of the private estimates have been moving higher. I know the Stone X estimate for Brazil moved higher this month. The customer survey. Are you concerned about the weather picture in South America right now, Craig?
Argentina, absolutely. Like it is dry in Argentina over a large area, right? But and that's definitely helps the corn story. But on the soybean side, I mean, some of these private analysts for soybeans, I've seen north of 170 million metric tons in Brazil, which I mean, we'll see. We'll see how high it actually gets there, but that can make up a lot. for what Argentina has to lose. Plus, the Chinese demand hasn't really all been that great. So weather's definitely a concern. It's January. And also too, if the weather gets hotter or drier in Brazil, or they eventually get a weather story, it's going to affect corn probably now than it would, soybeans. If there's something develops like in late January or February. For the next 2 weeks, for the next 10 days to 14 days, still looks dry in Argentina. So if you get a little bit of a bullish WASI report and it keeps on staying dry, you would think corn would help out the most. But from the crop conditions and reports we get, the South America, the Brazilian crop does sound like it's in good shape still.
Craig, always appreciate the time. Any final thoughts for us here you'd like to wrap up on this week?
Yeah, I would say, this is the kind of year where we're not expecting big breakout home run, kind of home run prices, right? So if we get these rallies because of the report, or because of the weather rallies, we to be aggressive. I mean, especially for this year, who knows about 2026, but just the way things are looking in terms of the demand and the supply side, we want to be a little bit more aggressive on sales than we have been in the past.
Craig, if folks want to have a conversation with you about the markets and their marketing plan, take a look at one of your webinars as well. You do a lot of those. How can folks get in touch?
Yeah. Well, the next webinar is going to be later on in February. We're going to go over the whole basically our estimates on new crop acres, and how it can affect prices. You can go to grainsandoilseeds.com. That's both plural, grainsandoilseeds.com. Or you can give me a call, 312-706-7610.
Craig Turner with StoneX. Good to catch up with you, sir. Thanks for joining us. We'll talk to you again soon.
Anytime. Thanks a lot.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.